This is Mark Espy once again from MarketTamer.com, also known as a Robinhood Trader. We're looking at the SPX. Must remind everybody again, this is all for educational purposes only and not meant as a recommendation to buy or sell anything. Well, we had the breakdown a couple weeks ago out of a symmetrical triangle rather than a channel, and this is a very prominent and recognizable chart pattern, and you should pay attention to it if you see this, because you're going to get a break out or break down out of this. And in fact, what we got was a breakdown out of this, and it was a fairly significant breakdown and then trade down. The 2 days after that, actually, we had the flash crash day, which was on May 6th, and still don't really understand, I haven't really heard any substantial evidence as to what really caused this. Then we recovered and came up to just beneath where the breakdown day out of the symmetrical triangle occurred, and then retraced once again. Now, we came down so viciously yesterday and we finished at the lows that it actually took it outside of the Bollinger Band, which is this green line that you see right here. This is the lower band and this is the upper band. These bands will contain typically about 95% of the price action. So when you see a move that is so large and so quick, most of the time you're going to see trading action that will take it back inside of the bands, which in this case means that we're going to be traded sideways, up certainly, but it recovered sideways, didn't really spike back up above the high of yesterday, but it was substantial enough to trade up inside of the bands. And this day could be classified as a piercing line because it gapped down and traded up and closed very close to halfway up the prior day's candle. The low today was put in at 1056, and we need to recognize that right now as the bottom of this channel. So where are we going to go from here? Well, I'm going to feel more bullish than I feel right now. I'm fairly neutral right now. I feel it's going to trade in this range, but I'm going to be more bullish bias if it trades up and closes back up above the 200 simple moving average. So we'll see if that happens. My sense is that it's going to begin to establish a narrower range going forward. I took a peek at the VIX futures into July, and I believe that they were around 35 last time I looked at them. So I'm thinking that the volatility is going to begin to abate a little bit. Today was a retracement on the VIX, and we actually pulled back about 5.69 points. It's still above 40, and that's substantially high. But I do believe that we're going to be starting to see a retracement or a lightening up, so to speak, of the volatility, maybe trading into July and August, maybe back into more reasonable volatility levels between 25 and 30. And if that happens, we'll get this a narrower range going on right here. We have the top side of this and the bottom side of this. It's a large range. We're talking about from 1055 all the way up to almost 1180, and that's quite a large channel. So hopefully it narrows down for us. We have a swing high here at 1150. We have this channel that was put in back here in November, December that needs to be recognized, and then we also have the February 5th low at 1044. I think I mistakenly said in the Dow analysis February 8th, but it was February 5th that we put in this low, which began this tremendous ascent that we saw right here. The MACD is really not showing us anything other than bearish sentiment, and it looks like we're beginning to just approach the overbought, the oversold area of stochastics. We're not quite there, but just about. So we'll keep an eye on that and see if it crosses back below and then back above. It looks like we might get a crossover here as well. So let's pay attention. The stochastics, in my estimation, is a good leading indicator, and it's one of the first things that I look for. So I would say expect some narrower range trading and a reduction in volatility going forward. And I would be very much surprised if it broke down below the February 5th low or back above this high at around 1180, at least for the short term. Okay, we're going to move over and take a look at the comp Q.